Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's 97th CP program organized by AASP of ICI for this year. We have organized various webinars and as well as CP programs on various auditing topics relating to auditing and auditing standards. And today the topic is very important. That is the professional skepticism during the audit. In order to tackle this, we are having with us our learned speaker as well as from our own fraternity, C. Ali Liani ji. On behalf of AASP of ICI, I welcome Alim ji in this 97th CP program organized by AASP of ICI. It is my proud privilege to share with all of you the brief profile of Alim ji. Alim ji is Director, Audit and Assurance with MSc and Associate Chartered Accountant. He has over 14 years of vast experience in providing audit and assurance services to clients and handling quality assurance and risk management for the auditing and assurance practice. As far as his area of expertise and experience is concerned, he in the audit and assurance services to the manufacturing sector, oil and gas sector, in quality assurance in auditing and assurance practice, to advising on qualification in audit reports, certificates, financial statements, review conducting code reviews, as well as the drafting engagement terms, etc. And in the guiding the term audit terms on implementation and interpretation of the Indian GAAP, Ind AS, IFRS, Companies Act 2013, and SEBI registration. He has given so many training programs as well as seminars, webinars, as well as the virtual CP meetings imparting various trainings pan India on implementation of audit tools, auditing standards, Indian GAAP, Ind AS, Companies Act, SEBI regulation, and as well as he has also conducted various lectures as well as programs for the GMS specialists. He has also provided expert opinion to the clients, assurance services for capital market transactions on IPO, QIP, etc. He is associated at audit and assurance part in various manufacturing as well as financial services like mutual fund, insurance, and oil and gas, PSUs, trust, and NGO. Still, list is very vast. So once again, on behalf of AASP of ICI, I welcome you, Alim ji, in this very important webinar on audit organized by AASP. Honorable Chairman and Honorable Vice Chairman, sir, has stuck up in one of the meeting. So I request Alim ji to start the proceedings of today's webinar. Over to Alim ji, please.
So thank you very much, sir, and good evening, and welcome everyone. It's my privilege to be here to speak here again. And today you have given me a very interesting topic, and I just hope that I can do justice to the time we have. Because it is one topic that is like a spear through everything that we do. It is going to touch everything that we do, and it is the cornerstone, it is the heart of our practice. I'm very happy that this topic has been chosen, because in the cycle of auditing, we sometimes forget that we have to apply our mind only, because today's auditing environment has become so complex with the number of laws, a number of checklists, the number of the time budget we have, the number of reporting deadlines, the expanse of the audit report, which has increased like never before. It's becoming so difficult to maintain your composure in an audit environment, and in between that, everyone has to be skeptical, and we cannot miss the biases. We cannot be misled by the client. In between all that rush and roll of audit, we have to understand that our mind has to stay very calm, very focused, and we have to achieve our objective. We have to, ultimately, we are responsible to the shareholders, the stakeholders. They are looking up to us. So it is so much important for us to keep having a challenging mind, to keep having a questioning mind. And in all these various compliances, we should not forget that auditing is not actually a compliance function. Auditing is a dynamic function. Everybody is looking up to us to present the next finding, something beyond what the management is saying. So today's topic is very important from that perspective. It is finally something we have to refresh. I'm aware that the well-experienced auditors in this forum who are listening to me will have that experience and edge to be skeptical. But for the younger generation that was just cleared the exams and is just stepped into the professional workplace. This is a very good seminar to make them equipped on how to think, how to go through the various hurdles in audit and find those answers, find that evidence, that document that helps us prove that yes, we did a good job. So I like to start the session, and once again, thank you very much for holding the session. A very important session for everyone, and I'm sure I hope that I have able to give something back to everyone to take home at the end of the session. So let me project my screen. I have a presentation as well. Okay, if someone from the ICI can confirm that the screen is visible,
yes,
or the
sir.
presentation
Yes,
is visible.
it is visible, sir. Visible, sir.
And is it visible in the PowerPoint mode, the presentation mode?
Yes, sir. Yes, sir. It is fine. PowerPoint mode.
Okay, fantastic. So looking at the time we have, we are going to break the session up into various parts. We'll first try to understand what is skepticism. After that, we will try to understand during the audit, how do you handle skepticism? What are you supposed to look for? Number one. Then the most important, we all know what we need to look for, but the challenge in finding that answer, that evidence, is so high that this session is majorly, I would say, contributed to overcoming that challenge, because we are all qualified chartered accountants. We all know how to do our work, but there are so many challenges along the way, challenges of time, challenges of knowledge, challenges of pressure from client, challenges of technology, challenging of increasing reporting requirements, and less time to do our job. That's the major challenge. So how do we get through these challenges is something. How do we overcome these challenges is something I will be discussing more in detail today. So let's start. As you can see, the first picture starts with the person thinking, what do I do? The question mark is basically the sign of an auditor. Yes, we are always thinking. We are always thinking how. We are always thinking why. That is the core of our profession. Like I always, I'm very proud to tell people that because I'm a field of auditing, I do risk analysis in everything that I go through. So if I am buying a car, or if I am buying a house, or we are buying even a suit, our mind starts thinking, okay, is this right, is this wrong, is this the best option, do we have more alternatives, what could be wrong here, if he's priced it very low, there's something wrong in this, something is missing. Our mind starts running that way. We start analyzing the evidence in front of us and trying to find the loophole, something to, if we feel that, let's say you're buying a suit and the price is not justified, you are going to start thinking, okay, something's wrong here, let's find out what. So then we understand, okay, it's a second sale, or the product is about to expire, that is the reason the company is giving it on a discount. So this kind of thinking, that we find the answer, and this is very special to auditors, and I'm so happy about that, because life decisions can be made more better and more effective if we have a mind like that, where we are always looking for we are critically looking at everything that we do, everything that we come across. So all said about life itself, where we apply skepticism, let's take a look at what is skepticism, how does it come about, from where does it come, and why is it so important. All right. This is just a table of contents of how we will be proceeding today with the session. A brief introduction, why professional skepticism is so important to auditors. Very important to understand. Then we will talk about the standard of auditing, SA 200, which talks about professional skepticism. Then we will understand professional skepticism, where to apply professional skepticism, what is professional judgment, and as I said, the most important, the challenge in being skeptical and how we can overcome the challenges. Then we'll briefly talk about fraud and professional skepticism, and then documentation. And at the end, I'd like to talk about how we will go forward with professional skepticism and auditing going forward. What is the future? What do we need to take care to do an effective audit? So let's begin. So the word itself, let's understand, the word skepticism is derived from the Greek word skeptikos, which means to inquire or to reflect. To inquire is to seek information by asking questions, the primary way in which we get our audit evidence. So professional skepticism is more an attitude and a mindset. It is not something you do. If you ask me to point out what should I do to be professional, to have to be, professionally skeptical, I can't answer that question, because it is an attitude. It is not that you have to, while I will talk of this presentation of important areas, it is not that you have to be skeptical in only one or two areas. You have to be skeptical all throughout the audit. Completely during the audit, your mind has to be skeptical, right from the planning, the execution, and the completion, including the last few days. In fact, when the client is giving you information that is pending in the last few days and asking you to wind up the audit fast, that time is also very, very important to be skeptical. Okay, so it's an attitude, and the client should be able to see that my auditor is skeptical. I cannot just go about taking him for granted. He is going to look at everything from his own set of eyes. He's not going to believe everything I say. And I think clients have to first understand my auditor is skeptical. Let me be prepared to answer his questions rather than waiting that the auditor will come, he will ask the question, then we will answer him, and then I will find answers for him. So there is a point here for the client as well. He also needs to be prepared. He should think what the auditor is going to ask. So that's his professional skepticism. He also needs to be skeptical that, okay, auditor will ask me 4 questions. Why did I do this? So let me recheck that what I'm doing is right or wrong. Out of the 4 questions he's going to ask me, I need an answer for all of them. If there are 4 alternatives for doing a particular transaction, I need to have an answer why I have done this particular transaction in this manner. So skepticism is also on part of the management. Okay, if they are skeptical when they take their decisions on accounting, transactions, and estimates, they will be easily able to have a smooth audit when the auditor questions them on those fronts. So let's look at it. How does it go forward? So in a nutshell, now most of us are trained as auditors. We have it in us. We never really lose the urge to question numbers. We question every number, like I said. If anyone offers us a discount, we question why a discount. We don't take it for granted that, yes, we're getting a discount. We question why the discount. So we come to know whether the product is defective, whether it is seconds, whether it is a second, or whether it is about to expire. And that's the reason we're getting a discount. So we always had the urge to question, and auditors have this inert ability to do that. So the temptation to ask, what's the basis they have been calculated, the numbers, to prod and poke around the subject and to make sure that they are what they appear to be. Becomes instinctive for auditors. So that basically, in a nutshell, is professional skepticism as well. It is just us having the questioning mindset. Now, this is a very general understanding of the word professional skepticism. I'll now take you through the standards of auditing and what they have to say about it. So let's understand, why is professional skepticism so important to the auditor? Why is it so important for us to be skeptical? We all have a job to do. We follow our audit procedures. We check what is required to be checked, and we can walk off. But today's world is requiring auditor to be more and more skeptical. Why? Now let's look at what happened in history. When the world faced economic uncertainty, especially in instances like the global financial crisis of 2008, we also had, in that time, real estate valuations and fair valuations of financial instruments was a very, very big question. And people questioned, where was professional skepticism when relying on those estimates? The COVID-19 crisis that recently happened, 2019, 2021, thankfully, we are now out of the COVID crisis. Otherwise, in 2019, when COVID hit, and I think it was January when the UN declared it to be a pandemic, and we closed our year in March. So it became a very big question on every balance sheet that we signed, that our companies adequately capturing, their debtors provisions, the inventory provisions? Are their projections for business still on track? Because lockdown resulted in a complete nationwide shutdown of logistics, businesses, stores. So this became a very difficult time and it came upon the auditor because the businessman did not want to take a hit on his balance sheet. In his opinion, his estimates were fine. He wanted to avoid it. But as auditors, it became important for us to start evaluating, to become skeptical, to question, is the management, what the management is saying, whether they will be able to survive the economic crisis, the COVID crisis, or they will not be able to survive the COVID crisis. So a very easy example of being skeptical is that if you give me 3 companies and in one of them we have a retail store, the ability of the retail store to pull out of the crisis became a very big question mark, and his balance sheet would be largely questioned on realizability, as compared to if you spoke to me of an online business or online retailer whose business was intact because he was still selling goods across the internet. So here we need to take a step back and understand we need to be skeptical which business can be hit by the crisis, and we need to ask questions. What happened? How did you get out? What was your exit strategy? How did you take care of your inventory? These questions have to be asked, and we saw that very much in COVID-19. ICAI came out with a lot of guidance on helping auditors to evaluate matters like physical verification of inventory, going concern assessments. So we had a lot of guidance from ICAI that to enable the auditor to be more skeptical before he signs the audit report. So when we have global uncertainty, definitely a time to be very, very skeptical. So auditors in many jurisdictions have been criticized for not applying sufficient professional skepticism at that time, particularly in relation to audit of fair values, related party transactions, and going concern assessments. Now, today we have increasing number of regulators coming in and reviewing audit files, and the number one problem they have, or let's say the complaint they have, is that they are not able to see professional skepticism on the audit files. This is the major problem that we need to address as auditors, and we need to take care that our file speaks for it, not that we speak that we are professionally skeptical. So it's not true in all circumstances. Definitely, we do good audits, but the burden of proof many times falls back on the auditor. And that's why it is so important for the auditor to not only be skeptical, but ensure that the documentation is proper, perfect. It should demonstrate the professional skepticism. Because first thing, professional skepticism is difficult to document. But still, we have to ensure that our files demonstrate. That will be the focus of today's discussion. Now, why professional skepticism is so important? Like I said, the auditing function is a dynamic one. The expectation of auditor is going beyond tick and tie, since auditors are now looked at as the independent objective examiner of the books of accounts. Now, we may question that internal auditors need to be skeptical. We may question that management, valuation teams, tax consultants, they all need to be skeptical. But because we auditors are looked at as the independent examiner of the books of account, it's very important that we be skeptical, because the others are working from some or the other angle on behalf of the management. They're trying to support the management in certain matters. But for us, we have to look at it totally independently. So we have to cut out all bias, sit back, and then analyze, and then be skeptical, critical of what we have in front of us, and then decide whether the management has taken a correct call. So this is why it's most important for external auditors like statutory auditors to be skeptical. Now, next thing is that skepticism is directly linked with the audit quality. How the auditor applies professional skepticism to the audit directly impacts the quality of the audit service. And so you cannot say you have had a good quality audit unless you can demonstrate professional skepticism. It's just not possible. Today's world, we are looking at various quality benchmarks coming up. We have the AQMM from ICI. We have regulators looking at us for quality compliances. So the single most important matter there is professional skepticism, which can bring the firm to the next level, which can demonstrate the firm's ability to service and do effective audits, quality audits. So let's look at what happens. When you apply professional skepticism, it enhances the likelihood that the auditor will understand the industry, the line of business, the business process totally, and any nuances that make your company different from the other companies. So naturally, it causes the auditor to ask the questions that may otherwise go unasked. This will enable the auditor to provide insight and value-added service as an auditor, which is the one thing clients are looking for today. They do not want the auditor to only finish a compliance function. They want the auditor to start adding value to their business. So this is where professional skepticism steps in. So while I explain these various factors, understanding industry, understanding the business, understanding the processes, this is what professional skepticism has to go along with this. So that is the primary requirement of an auditor, that you must understand your client. Let's talk more about it later. So officially, where does professional skepticism come in for the auditor? So SA 200, overall objective of the independent auditor and the conduct of audit in accordance with standard auditing, specifically says the auditor should exercise professional judgment and maintain professional skepticism throughout the planning and the performance of the audit. So it is required at all time. What is professional skepticism as per this definition and standard of auditing? It says an attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to fraud or error, and a critical assessment of the audit evidence. Now, if you try to break that up into parts, as you can see, it is definitely an attitude. So it has to go across. It will be looking at it throughout the audit. You have a questioning mind. You have to be alert, and you have to make a critical assessment of the audit evidence. This is the core. The three things are the core of professional skepticism: having a questioning mind, being alert throughout the audit, and critically assessing the audit evidence. Now let's look at that. What is, so I just, I put this slide again to show everyone how important this part is. Okay. Now we need to plan and perform the audit with professional skepticism, recognizing that circumstances may exist that may cause the finance statement to be materially misstated. So it requires a certain preconceived notion that the finance statements are wrong. And we start there. Okay. Now we'll talk about whether we should doubt everything or not. That will be covered separately. But let's start with a questioning mind. Now, when I say being alert, what do I have to be alert for? So we have to be alert for the audit evidence that contradicts other audit evidence obtained. Okay. That is very much present when we do an audit. There are various parts of the balance sheet. We get various kind of evidence on the file. These evidences should corroborate with each other. Okay. They should confirm each other. Wherever you find evidence that contradicts an evidence already obtained, it is a red flag. It is an indication that someone has not shared something truly or honestly with you. So that's the first thing we are looking for. The evidence we have, and we have to where it contradicts with the other audit evidence. Any information that brings into question the reliability of the documents and responses to the inquiries to be used as audit evidence. Sorry. So any information that brings into question the reliability of the documents. So when you are doing an audit, and while going across the audit, you may have interviews with people and you may learn something about the company. And wherever that information makes you doubt the document given to you is a time when you have to be alert. The conditions that may indicate a possible fraud. There are several such indications that come up in audit, but we need to be alert of such conditions that come up. For example, too many unauthorized journal entries. Now, passing a journal entry is not wrong, but too many entries passed unauthorized, or let's say, a transaction which is a normal transaction, but it has no document. So a question does arise that if this transaction is in the normal course of business, why doesn't it have a supporting document, and why is it so difficult for the client to give it to us? So suddenly noticing that certain transactions, the supportings are not available, is something that should give you an idea that when all the other evidence is easily available, in a list of vouchers, why is it that these particular transactions are not available and the management gives them to you later? We will see such examples later. The circumstances that suggest the need for audit procedures in addition to those required by the ethics. So these are places where we are doing the procedures, but we come to know of something that we need to do further procedures. So example, let's say we are checking related party transactions. Fine, it's allowed. It's not a wrong thing to do. But when you come to you see a lot of related party transactions in the normal course of business, or uncommon related party transactions, or unauthorized ones, those are certain, or you need to start doing a little extra check. Okay, why? So let's say in the previous year there were no related party transactions, and suddenly in this year there are many related party transactions. Even if it's in the normal course of business, you have to start thinking that why is it suddenly that the business needs to do business with related party. The company had to do business with related party. It needs to be justified, right? If all these years the company was doing normal business with normal parties, all of a sudden, why does it have to do transactions with related parties? So that is a question that should strike you. That, okay, I need to find out why. I have done my audit procedures. There is a confirmation in place. The inquiry has been done. Agreements are there. But let us be more skeptical and question the management as well. Let's go to them and ask, okay, what happened this year that you needed to approach a related party for transactions? And that's when you realize that you're being skeptical, you're challenging what the management has done. And that is where you will find your answer. And you need to bring that into your file. You need to document that matter, that look, I did ask the question. I did get the additional information why this transaction has taken place. Okay. And that's where you can demonstrate that you have been skeptical in your work. And that will be a good tick to have on your file, a good, award on your file. So let's look at it. Why do we do professional skepticism? The most common reasons why we want to be skeptical is to reduce risk. Risk of what? So risk of overlooking the unusual circumstances, overgeneralizing when drawing conclusion from audit observations, or the risk of using inappropriate assumption in determining the nature, timing, and extent of the audit procedures and evaluating the results thereof. So there is a risk that if we sit back and don't think critically, we may overlook the circumstances. We may generalize the observation and say, okay, no problem, let's move forward. Now, we don't want to do that. We want to be skeptical. We want to be alert in the audit. So we have to maintain professional skepticism so that we don't just sit back and take matters for granted. And it's very important at the planning time, because at the planning, you determine your audit procedures. So you need to be skeptical of your understanding of the client. So when you plan the audit procedures, you plan well, because if you start asking documents and investigating the client towards the end of the audit, he's not going to be very happy about it. And he will tell you the same thing. Why didn't you ask these questions before? So it's very important at the planning stage itself, we be skeptical. We ask the answers, we get the answers, ask the questions and get the answers so that we can close the audit in a timely manner. That's very important. So let's look at that later. So a summary of what we can do, about this. What can we do to be professional skepticism? One, let's critically evaluate all the audit evidence we received. Let's not just close our eyes and put it into the file. No, we are going to look at it, we're going to read it, we're going to understand it, and we're going to ask a few questions on it. Look for questioning the contrary audit evidence, and don't leave it till you have got a convincing answer. This is important. If you find contradictory audit evidence, where let's say while vouching sales you found something and in debtors you found something else, and it has to agree. And if the answers from both departments is contradictory, you don't leave it till you are convinced or of the variance. Okay, this is important. Don't leave it. Okay, get the explanation. Go to the VP sales or the department head. If he doesn't give you the right answer, you go to the CFO. You go to the director if you need an answer or an explanation. But don't leave it. Now, the responses to inquiries and other information obtained from management and those charged with governance needs to be assessed properly. So, obtain your understanding during the audit. Obtain explanation from the management. One step further, ask those charged with governance also to confirm this understanding. Many a times, if you take this, what you've learned to the TCWG, they have some very different reply to what you have found. Because TCWG normally do not get down into operations of the company. They do not get down into the journal entries. They do not get down into the agreements and transactions. Okay, they have decided something at the board level, and they are under an impression that the company is functioning in a particular manner. Now, if you have this information and you talk to them about it, there are two things that will happen. Either one, they will enhance your understanding of the transaction, which is also very good, so you can document it properly in the file, and it looks like you've done a really good job of the audit. Two, they may contradict what is happening in the company, and they may say that, no, this is wrong. This was not the intention of the management. I think of the board, let's say the board, sorry, and they may question the management or bring the management to answer that why have they done these transactions when this was not the intention of the board. So that would be great for you, because you become the bridge between the management and the TCWG, and you're able to ensure that the company is running with proper governance in that fashion. So let's be alert and let's have more discussion with the TCWG, so you can corroborate what they say with the evidence you have. This is very much helpful in understanding new loans taken by the company, new investments being done, including critical litigations happening in the company, opening up of new projects, capitalization of projects, long-term advances, new business lines, new ventures, opening up of new branches. These are the things that you can corroborate with the TCWG, talk to them about their business plans, and that will really help corroborate with the evidence below. Last, you have to consider the sufficiency and the appropriateness of the audit evidence obtained in the light of the circumstances. So this is basically questioning the adequacy of the evidence. Now, for example, if there is a large transaction happening and you find very less documentation regarding a large transaction of, let's say, 10 crores, you have a single agreement letter, you don't have any backup points, discussion points, nothing is seen on record. It raises a big question that for such a large transaction, you have no documents to support, not many documents to support it. So it's a red flag. Whereas for a small transaction, your SOPs say to obtain, let's say, multiple quotes, you document the discussions, you need approvals. And for a large transaction, you circumvented those matters, those processes, and just did the transaction. So you need to consider whether this document you have is sufficient, considering the humongous nature of the transaction. Do you need to go and get some more evidence? That is also talking about being skepticism in audit. Okay, an interesting question here. Should we doubt the information we have, and should we rely on our past experience? Now, as the long heard saying, ages old saying, auditor is not a bloodhound. Okay, he's only purely a watchdog. So that means that we don't have to get into everything. We are only a watchdog, right? In that sense. So should we doubt all the information we have received? So the answer to that lies is that, as per the auditing standards, the auditor should accept the records and documents as genuine, unless the auditor has a reason to believe the contrary. So you have to be alert for that reason. If you come to know that I don't want to rely on this information, something is contrary here, then you have to get into an investigative mode. So in case of doubt about the reliability of the information or the indication of the possible fraud, the standard auditing requires the auditor investigate further and determine what modification or addition to audit procedure are necessary to resolve the matter. Okay, so you need to then, if the word used is investigate, so you need to plan more audit procedures than normal to find out to get evidence on that particular matter. Now let's talk about the past experience. Should the auditor consider past experience of the honest? So while we should use the past experience to determine whether the client is of integrity and honesty, okay? So this experience should help us decide. So past experience always helps us have a little indication of what must be the state of accounts of that company. So if it's a very well regulated and governed company, they will have lesser mistakes, proper controls, proper infrastructure, and competent people. But if you see a client that has been dishonest in the past with you, has tried to hide information or hide transactions, then you must be ready that when you go to the audit this year, there is a high chance that there are transactions that are hidden. The intention of the transactions are not informed to you. There may be instances of management fraud. So while we have this past experience, we can use it to make to design better audit procedures so that all the misstatements in error and fraud are found. However, the auditor is not relieved from the need to maintain professional skepticism. Even if the client is honest, we have to obtain nothing less than persuasive audit evidence. So if the client is dishonest, definitely we need to go in and do a lot of work. But if the client is honest, it still does not relieve me from being skeptical. I have to be skeptical. I have to critically evaluate the audit evidence. And I must get persuasive audit evidence on my file before I move forward. Okay. Now let's get into a more practical aspect of understanding this. Where do we apply professional skepticism? Okay, where when you go to an audit, where are the main areas where we should be applying it? Accounting estimates. Okay, that's one place where management can play, because there is no perfect answer in an estimate. It is a judgment being made, right? So you need to question the assumptions used. You need to challenge those assumptions, and when you challenge them, see all the alternatives possible, then you will find whether it is the estimate is biased or not. And that's our main focus. We want to apply professional skepticism to know whether the estimates are biased by management or not. Okay, it's one. Second, most important and very much prevalent in any audit related party transaction, as I said earlier, we have to be alert during the audit for information that may indicate previously unidentified or undisclosed related party relationships or transactions. So let me tell you that it is important for us to disclose the relationship as well in Schedule 3 and not just the transaction. So we must know and identify the related parties. Any significant transactions outside the normal course of business with the related party, when evaluate the business rationale on that transaction or the lack of rationale on that transaction. This would mean that they have been entered maybe for a fraudulent purpose, or to conceal the misrepresentation of assets, or calls into question the reliability of the external confirmation received from the related party. So as you know, related parties are close to the company. So receiving external confirmation requests is not a very independent request actually. While we may receive it independently, the management definitely has a relationship with that party to influence the outcome or influence the response in the external confirmation. So we may have to question the reliability of the external confirmation. Okay. So this is all very important from related party transactions. So anyway, we have on us a responsibility to identify the relationship parties. So how do we start? How do we do this? The first step, I'm just diverting from the topic, but telling you how it's done. First step, you need to identify, are there new related parties compared to last year in the current year? That itself indicates, let's say there are a couple of new parties that have come in. You have to first inquire what was the requirement to become related parties, or what was the transaction, what was the business rationale to do transaction with these parties. This is something that we all must question. Okay. And any transaction outside the course of business which is significant, especially when we have loans and funding with related parties, we should question these. Okay. We should also look at the prices which they are done. So these will help in a lot of uncovering, because large amount of frauds are done between related parties. So very, very important area to be skeptical. Very, very important. I'll move forward. Considering the laws and regulations. Now, in the midst of doing the audit, we have looked at all the transactions, but we miss being skeptical for non-compliance with laws, because this is like a it's something that is growing in the background, and when it grows, it suddenly becomes so huge that the company cannot handle or remediate that mistake of non-compliance. So we must be skeptical for every transaction that is violating a law. If the company is violating Companies Act or RBI guidelines or FEMA guidelines, which is recently in the news for many companies, it may result in a huge penalty or huge reputational loss for that firm or that company. And that results in a business loss of the tenders, or the order book is lost because of non-compliance with laws. And it may result in huge penalties or even cancellation of license. Now, a cancellation of license is a very big thing, because then your ability to operate the business is over, and you now question the going concern of the company. So that's how big a non-compliance of a law can become. And it's not uncommon these days. We are looking at a lot of regulation by regulators on companies, and we are also seeing non-compliances getting picked up faster these days than before. So this is something we must be skeptical about. No doubt, it does not directly impact the financial statement, but eventually it could have a pervasive effect on the financial statement. So we must be aware, we must look for such instances in an audit. The use of specialists is another area where management's, it could be the management specialist or the auditor specialist. It could be either, okay, internal and external. We must check the competence of that specialist, because in the today's growing complexity of accounting, when we have complex financial instruments to be accounted for, we have a lot of fair valuation to be done, we have complex tax provisioning, especially if you have across multiple borders, then you have got complex tax treaties and tax arrangements. And we are also looking at a lot of companies functioning in multiple countries. So the rules and laws applicable in those countries are maybe different compared to ours, and especially the accounting treatment is different in those, or GAAP is different in those countries compared to ours. And we have specialists to convert those differences to our GAAP. So these are the kind of things we need to assess the competence of those experts, because we are relying hugely on experts. One of the areas where experts are coming in big time today are information technology, because the platform being used both by companies outside to do business is becoming very complex with multiple softwares, and especially the online model is live, it's real time. Getting reports from online models, verifying the authenticity of those reports is becoming a challenge. And the accounting system, getting those reports into the accounting system and merging it and creating financial statements is also become a complex process. So Here we may need specialists to help us understand the coding, understand the tables behind those convergences happening. So specialists are working in there both from the client side and from auditor side. So we need to assess the competence, the ability, the judgments that they are taking in drawing up their assurance. And we must ensure that there is no bias in the specialist work, no bias towards the management. If there is a fraud, if there is a cyber attack, we need to have the specialists give us reports that are transparent of what's exactly happening and the impact it will have on the company's financials. So I've seen several instances where auditors are not aware of the impact of a cyber fraud. They're not, it may have happened in a small branch of the company as compared to the 100 branches that the company has. But let me tell you, a cyber fraud or getting into an information system of a company at a small branch could have an impact on all the branches taken together, because the same software is used across all branches. So the very simple example that managements try to convince us that, look, okay, don't worry, it was a fraud or it was a cyber attack in a small branch. No, the question is not that. Does that impact the several branches? Does it impact the head office? We have a lot of questions to ask here, and we have largely specialists or forensic auditors giving us reports on these matters. So we need to have skepticism there when we assess those reports. The other areas which are very well known are where we need to be skeptical are the impairment calculations, the fair value measurement of the assets, the going concern assessment. These are some of the most common areas where we need to be skeptical, especially because they involve estimates and calculations. Now, so this session now brings me to another part. What is professional judgment? So when we spoke about professional skepticism, we thought that it's an attitude, right? It is an attitude. So it's in the mind. It's a questioning mind, right? So judgment is the result of that attitude. Let's put it that way. Judgment is the result of that professional skepticism. This judgment is applied. So let's look at how when we apply professional skepticism, it leads to professional judgment. So let's see what judgment is and what the standard auditing says about it. So judgment, like I said, is the result of professional skepticism. So it is the application of the relevant training, the knowledge and experience within the context provided by the auditing, accounting, and ethical standards in making the informed decision about the course of action that are appropriate in the circumstance of the audit engagement. What that means to say is that you now use your mind, you apply your knowledge, the training you have received, the experience you have, and you take the subject matter that you are working on and you look at it from the glass of, from the frame of auditing standards, accounting standards, and the ethical standards. And you look at that subject, you look at that matter, and you take a decision about what are you going to do next. So the decision can be, what audit procedure are you going to do? Or how will you assess the accounting done in that matter? Or what is the outcome of that procedure that you did? And is it appropriate? So this will require judgment. So it's very easy to understand that the judgment involves a decision. Okay, so it's making a decision using your mind. So you have used professional skepticism, now you have made a judgment. So that is the professional judgment. Now, it is professional skepticism at play. So let's look at how this is something that we can quantify. So let's look at what goes into making professional judgment. How do we do professional judgment? So this is a small table that talks about how do you exercise professional judgment. So what do you need to know? What do you need to do? I am going to explain each of these matters in further detail. So these are some things we all know, but today I'll just help you put it all together. So what is professional judgment? Now, what are the steps to doing professional judgment? First, you be clear. what you are trying to achieve. Next, you know your objective, what you are trying to achieve by doing those matters. You identify all the alternatives that are available. Okay, you analyze all the information you have, and you need to conclude on one particular alternative. And after you have made the decision to choose that alternative, sit back and look at it again. Have you made the right decision? Is it suitable for this client? Is it suitable for this area? Now that's the steps of professional judgment. How do we exercise it? The skills you need to have a learning mindset, because you have to look at it as an opportunity to learn something new, because you don't know the client's business in totality. Let's say it's a new department. You need to understand the client's new area. So you must have a skill of learning, wanting to learn first, because you are going to get a lot of information which you need to analyze. So you have to be willing to learn. You need to seek internal, external help if required. So if the matter is very complex, you cannot make a judgment on your own. So you may have to consult internally or externally. So you must know when you want to step out and consult. Avoid all the common biases. You must not be trapped by old thinking, common thinking, matters like this is how it was in that client, it'll be the same here. Matters like you have knowledge on this particular area, so it will be this way only. You are not ready to open your mind to think that there could be other ways of doing the same job. So you need to have a very open mind to overcome the biases. And you need to document very well. Judgment has to be documented very well, because this is something you have decided now. So you need to explain the rationale of your decision. That's judgment. Now, what kind of a knowledge and mindset do you need to do this? So the first point is you need good technical knowledge. You need to know knowledge of auditing standards, accounting standards, and take a call. You need a mindset to evaluate the matter very well. So that's something you need as a mindset. Doing these both things together, at the back, you must not forget that it is only the knowledge of your client's business that will help you to do this better. Because if you use the same technical knowledge and the mindset in an insurance company, and you take the same mindset and go to a manufacturing company, you will not get the same outcome, and the judgment will fail. So you must ensure that you have a thorough knowledge of the client's business, because that is the deciding factor. Judgment is not the same everywhere. It will change. Let's quickly look at these points, what I've explained. So, like I said, first step, you have to be very, very clear on the subject matter on your hand. What do you have on hand? Okay. Let's take, for example, you need to take a judgment on, let's say, a going concern assessment. Okay. Let's take that, for example. Now, it just came to me. A going concern assessment. You need to be clear. Okay, what are you here to achieve? You are here to achieve, let's say, assess the going concern assumption of the company. Perfect. You're clear. What is your objective? Now, your objective is to go and conclude that the going concern is appropriate or not appropriate. You have to come up with an outcome. It can either be appropriate or not appropriate. So we are going to work towards that objective. We start then identifying all the possible alternatives to achieve that objective. So I start listing down all the things that I want to look at. I want to see the indicators of going concern. I want to evaluate all the alternatives given to me by the management. Let's say the management has made business estimates. I want to evaluate that. Maybe the management has shared with you a support document that the parent will support the company for the next 12 months. So you have another alternative that this may be true because they have backup from the client, from the parent. So that's your other alternative. 3, you may want to yourself assess the ratios. You may want to yourself assess whether the company really, whether the company has, the intention to continue in the future. That's one more alternative you need to see. So we have this all information with us. So in a going concern assessment, let's say we're looking at the ratios. That's one alternative. We're looking at any support or promise from the holding company to support that company. We are looking at the projections of the company for the next 2 years. So we have this information with us. Now we need to analyze all the information, and we need to decide, looking at them, what is the right approach, what is the conclusion on the going concern. Okay, so this was especially important in times of COVID, because every company gave us their projections, every company gave us reasons that they will continue in business in the future. But we all know that COVID saw many companies collapse, especially the brick and mortar model. The brick and mortar model has collapsed in many places, and we saw many shops and malls shut down. So we need to now see all the alternatives available with the management. Take a call that what will be the outcome. After you have decided, take a step back and look at it again, because sometimes we get so deep into deciding something, we forget the overall picture of the company. So you need to take a step back and reassess that, the conclusion you have reached is suitable in circumstances. Like, for example, a client may have a brick and mortar model, but they also simultaneously have an online business, and the income from that business may have gone up. So we had, let's say, the income of two verticals, online and brick and mortar model. That means stores, physical stores. So while physical stores turnover and profitability go down, the online profitability went up. So you need to reassess the going concern, looking at all the information together. And that may make you realize that no, the company is strong. It will continue in the future. It's not going to shut down. So let's see how do you apply the skills there. Now, the skill, you need a learning skill. As I said, you need to be ready to learn about the client, the business, or how to apply the professional standards on the client. Like I said, you need to seek internal, external help. So you may choose to consult internally or externally with a subject matter expert. So if required, the complex judgments like tax positions, fair valuations, estimates, inventory valuation. So you may choose to consult either internal, means inside your firm or with other teams working in the same industry, or you may call in an external expert to help you with this valuation. Like I said, we should avoid common biases. We'll talk about biases in the next slide. And last, of course, the skill to document well. This requires you need to create your document and simultaneously document the judgment. You need to create a judgment and document together to go to the next level, because you need to guide your team also how you have to move forward step by step, evaluating the judgment, and then only on the file you can demonstrate the professional skepticism. So team should clearly document the objective, the application of the professional knowledge, the alternatives considered, the in-depth evaluation of the information gathered, and the conclusion to justify and corroborate the soundness of the professional judgment made. The conclusion is very, very important. So it has to come out in a good document that we saw everything, we checked everything, we have checked and assessed and crunched, and this is the outcome. So you must have a skill to document well. That's very, very important. Again, what's the mindset we need? We need the technical knowledge, accounting standards, auditing standards, the specialized knowledge for that industry. Maybe a bank or an insurance company or a mutual fund client. We need that special knowledge. Very important one. We need the mindset to evaluate the matter. So we have to question all the points. We need to evaluate the appropriateness of the audit evidence. Do we need more audit evidence? Okay, I need to step back and see whether it's proper. Last, as I said, we need to have very good knowledge of the client. So that is the key to proving to the effectiveness of professional skepticism. So you must have an understanding of the business. What is the stakeholders' expectations? What is the management judgment made? And what are the estimates being made? So all together, all work together. The expectations of the management, they are profit-oriented, cost not profit-oriented, the business acumen they have, of how they want to run the business, the management judgments that have been made, the estimates, the accounting estimates that they have been made, they all should collaborate together. So you must have knowledge of that. You must have knowledge of the industry, the economic condition of a macroeconomic climate in which it is operating, the political climate in which it is operating. All that knowledge will finally be the icing on the cake to prove that your professional judgment is right. So I'll go back to the table again. What I basically explained is how to apply the professional skepticism. So you know the steps, be clear, know what you want to achieve, look at all the alternatives, analyze the information, conclude, step back, assess. What skill you need? Ability to learn, to consult, and to document well, and avoid all common biases. We'll talk about that later. To what knowledge and mindset you need? Technical knowledge, knowledge of the client, and a mindset to evaluate the matter critically. If you have these ingredients, your pathway to professional judgment will be easy, will be simple. And you won't be confused, you won't be lost when you do professional judgment if you have these ingredients in you. So it's very important that we build our teams, we build ourselves to have these ingredients in us when we go to an audit. Now, so let's talk about something psychological now. So biases is a psychological thing. It's not something tangible. Okay. So what's biases? So we are in an audit. We have to independently look at everything. But what happens in our mind is the mind makes an obvious choice. So the mind wants to see what, you see what you want to see. You don't want to see what the other person is seeing. Okay. So if your client tells you, oh, we have grown well this year, we have done very well, and he shows you the sales data, automatically your mind is fixed to know somewhere we have grown and you want to see the growth only. Your mind will not go towards the financial areas which have dipped, because that's the nature of the human mind. We want to see what we understand, what we have been told. So you need to be independent, sit back, critically look at everything again. It's very common when we receive audit evidence, the client comes up and tells, look, this is the agreement. This agreement will tell you that we have done so-and-so transaction for this reason. And then when you open that agreement, you will automatically want to go to only that para which the client said supports his view. Am I right? That's what happens. We want to see that para in the agreement which the client said supports his view. But do we take a step back and say that I will look at the agreement and decide whether what you are saying is supported or not? If you have this attitude, you will go through the entire agreement yourself to understand what it exactly says. Okay. If a client comes and tells you, let's take an example, a client tells you where you're understanding whether a convertible bond or a convertible debenture is an equity or a debt. Now the client has given you 4 reasons why it is equity. Your mind will try to find those 4 reasons only in the various agreements and arrangements made, but you will not want to go and assess it the other way. So this is something we need to change. We need to stop getting influenced by what we want to see. We should see everything independently and decide what is the fact. Another one is overconfidence. When we audit a client for many years, we are overconfident on how the client is functioning and the reason and the justification for all the transactions. So even when in an uncertain environment, we believe client has taken the right decision. We don't want to see the matters which are already discussed and settled last year. But that is not always the case. Sometimes a judgment was taken 2 years back to do accounting in a particular way. And today those circumstances may have changed. And because you are overconfident that the matters that existed 2 years ago are existing now, you don't want to visit that area again. So that is wrong. So we need to get over that bias. We must be independently looking at all the matters. Okay. The next is the availability bias. Like I said earlier, the mind's obvious choice is to see what it wants to see. And availability choices, mind wants to see what is available. We don't want to think of what we can get beyond what is available. So if client says, we did this transaction, there are only these 2 documents. So we want to believe on those documents. We don't want to cross question, why 2? Where are the remaining documents? Why didn't you have a discussion with them? Why don't you have a thorough, let's say, purchase order? They, why don't you have a evaluation done of the various tenders that you floated? So we want to rely, if a client gives us 2 documents, we want to rely on those 2 documents. This is the psychological way the mind runs. Okay, so that should be avoided. We must ask for what is available. Can what is not available can also be a question which is skeptical. Why not? Now, anchoring is again when we go on throughout the audit. We have a fixed starting point for a reasoning process, and we are too reluctant to move far from that, even in the light of the new information obtained. So, when we have a particular view and we sit down with the client, we want to cling to that view. We don't want to let go of that view. So, you need to be open. You need to also be open to being wrong. So, if client shows you information and it shows that maybe you were wrong, or maybe the judgment has changed or the estimate has changed, so you must be willing to move from there. You must be willing to move from there to appreciate the new information. So these are all biases that happen when we go to an audit. Okay, our mind runs in that way. So professional skepticism is taking aside all these biases. Professional judgment needs you to take out these biases and then apply your mind and look at all the options available and make a decision. That is what professional judgment is about. Okay, let's just take a minute here. So we're just taking a minute here to drink a little water, because now going forward, we'll be discussing all practical parts. So you can also take a little break of water. Now, this is something when I'm going to speak, this is something written very basic, and it is something all of you will relate with. This is an on-the-ground problem. This is an on-the-ground challenge, okay? When we go to a client, what kind of pressures we face? What kind of challenges we face? What kind of, let's put it this way, the challenges we face to being skeptical itself, which don't allow us to question the client, to get information, to ask for further documents. Why we are stuck? While seniors may not be stuck that much, juniors are many times stuck because they have never worked around these kind of challenges. So what we will do today is we will try to appreciate these challenges. We will try to appreciate it. Yes, they exist. And what can we do? What can we take care to overcome the challenge? This is something you can apply directly in your audit, on the ground, on the field when you meet a client. So let's look at some of them. An impatient client. I think we all have faced an impatient client. He's a client that doesn't want you to take time for auditing. He wants you to finish the audit fast. Okay. So we always come across many clients, but we have some of those clients are the impatient client. He stops us from doing too much checking. He stops us from asking too many questions. He stops us from taking our time to evaluate the evidence. So let's go ahead. Another one, multitasking. Now, sometimes in an audit or in multiple audits, so the team has two situations. Either in an audit, they are doing so many areas that in each of the areas, they don't have the time to go down. Or they are handling multiple clients, which also doesn't allow them to give time to a particular client. This is the challenge many firms face. Sometimes with staff crunch, sometimes in the peak season when unexpectedly client comes up and says that, like we had the tax audit season just now, I'm sure everyone was working really hard in the last 20 days. So we have multitasking happening. The challenge of a face-to-face interview. Now, you can ask 3 questions. If you have forgotten one question, you can again ask the next question, or just come back and ask the question. But in an online scenario, once the call is cut, it's difficult to go back and reschedule a call or ask that person again for information. So this is a challenge a lot of people face. They may be working from their homes, they may be working from offices, but not at the client's place. So a challenge comes up. Difficulty in understanding. I'm sure everyone here in their early days of learning have had this problem, that we go to the client, we want to understand, let's say, a fair valuation, and he goes on explaining certain matters. He has maybe a different tone, and we try to understand what he's saying, but we missed it. We missed some parts and we didn't understand, and we are not convinced. What is he exactly trying to say? How does he support his assumptions, his estimates? We can't understand sometimes his business model. So this is one challenge. And the difficulty in understanding, obviously, you have not understood the client and his business. How will you ask questions about it? So that's a challenge. There is immaterial data or unauditable data. So when I say immaterial, I'm not saying we need to scoop it out. For example, let's say an electricity company. So an electricity company, every voucher, every sale transaction is immaterial because it is far below even the clearly trivial we have, even below the basic. So like electricity company has turnover in thousands of crores, but every no bill will exceed more than, on average, even 5 lakhs. So much information, so much below materiality that we don't understand how to audit it. Or the data is in unauditable format. We don't understand this format in which he has given the data, and you are not able to audit that data. That's one challenge that stops you from asking more questions. A lack of understanding, again, while I said first is difficulty in understanding, the third is the lack of understanding of the client's business. We don't understand his business properly, so we can't ask the questions. We are reluctant to bother. So in this case, we don't want to bother with information that is not available to us. We just want to look at what is our information and do our work. We are not concerned of the information that was not given to us. So this is something that doesn't allow you to be skeptical, because had you seen all the information, you would have had a different thought. But we are not bothered. Okay, client has given, let's say, this document. I look at this document and conclude. This is something we are reluctant to bother about the other information. No issues last year. This is very simple. When we audit, we see a particular area. Okay, no, there were no issues in this area last year. So probably the person who did the audit last year has done a good job. We don't have to look at it again. This is a common bias we have. And if there were no issues last year, we already believe that there are no issues this year also. It's very common. We are reluctant to offend. This is very much there. We don't want to offend the client. We don't want to get up and tell him that, look, you have given me this information, but I want more information. We are not ready to tell him that, look, I know the audit is coming to a close, but I need this additional 10 documents, because we know the client is also working hard to close his financials. We know that his board meeting is scheduled soon, but we don't want to offend him by asking him at the last moment for additional documents. So that is a challenge for us in being skeptical. This results in delay of the work. So if the work is going to get delayed, my senior will shout at me and the client will be upset. So this results in a delay. And this results in me exceeding the time budget, because I had planned to do the audit in 3 days. Now on the 3rd day, I realized that I need more time, more information. I need more 5 days, and that is going to exceed my time budget. My senior may not be happy with me, and the client also will not be happy with you. So this results in a little psychological pressure on us in being skeptical. We can't be skeptical because of these reasons. So this is the core. I know all of you are related with this. All of you are facing this problem. It is, if not at one time, sometime or the other, we are facing this problem. Impatient client, difficulty in understanding the business, no issues last year. We don't want to offend the client. And it is happening at every level in your team, from the junior most person, the article trainee, to the partner. It is happening everywhere. So now that we have understood that these problems do exist, how do we overcome these problems is the next question. And the more interesting question, what can we do that we don't face these problems, that we can overcome these problems and still be skeptical and still do a great audit? What can we do about it? Let's take a look. So I have made these points with some examples of how we can understand what to do. Okay, so let's start. Is it coming? Okay. So the first way to overcome the challenge is to know your client. This is obvious and most important. So every team member should ensure he obtains knowledge about the client, the industry he is working in, the personnel, in addition to the knowledge of the area allotted to him. So he must know his management. He must know the multiple companies they are involved in. He should know how the business operates. How many branches are there, how many locations are there, how many manufacturing locations are there. So this gives him a certain amount of knowledge. Now, when you go to talk to the client, you are an educated person about his business. If he answers anything contrary to what you have understood, you are skeptical. You don't have to go back to him on the last day. Oh, I just realized that you said this on that day, but I learned that your company is structured in this fashion. Please explain. So if you go well prepared, basically, you have already become skeptical and you have overcome the challenge. So this is very important. So if I have knowledge of the client, how many businesses, branches, related parties he has, it can help me reveal any dummy companies established by, say an ex-employee or relative of the promoter, which may have resulted in the siphoning of funds without actual receipts of goods and services. So this is like, I know my business and my related parties. So if anything new comes up, I know that there is some fraud happening. I am skeptical to that. I'm ready to see that. So great knowledge of the client is the first step to being skeptical, and a very, very good step to being skeptical. I personally had an instance where I had read about the client and went to the client for the first time, but I had read the previous year file very thoroughly. So in that file, I had learned that the client had 6 branches. When I went to the client and we had a discussion, the client informed me that we are doing very well out of the 8 branches that have been operating for the past, year. Now that immediately woke me up. Okay, how come he is saying 8 branches when I have read the file? It says 6 branches. So we came to know that, on further probing, we came to know that the company was secretly operating 2 other branches for businesses and doing fraudulent nature of activities there. Now, the person who was talking to me did not realize that if he said this, I would catch that point, because he thought that I have come to the company the first time. I don't know about the client. So he will just assume that, Mr. Lilani will just understand that, okay, client, there is a client, there are branches, there are factories. How will he come to know in the so many factories, which is what? He just gave a casual reply. He didn't realize that in his casual reply, I was corroborating the evidence with my knowledge. I was corroborating the evidence with my understanding of the client, which helped me to understand that there are 2 branches running where he is doing some suspicious transactions, and he unknowingly shared that information over a call, over a discussion. So this is a very good example I wanted to share with you, that how a knowledge of the client helps you to be skeptical. If you have a questioning mind, you have alert mind, as we said in the beginning, you can catch it. Let's do something else. Yes, do your homework. Be prepared. Be sure of your facts before asking question to the client. So when you're ready with your data, read the balance sheet totally before you go to a client. Read last year's annual report fully before you go to the client. So you are ready. Then you ask the questions. Long outstanding capital projects lying in CWIP, including the huge capital advances lying in CWIP. This is a very common area clients park their funds. So if you have knowledge of the client's business, you have knowledge of how long it takes to capitalize the project, you can directly question the client that why is your project not yet capitalized? It has been more than 2 years. Normally, projects are being capitalized in 2 years. And we have had such instances where when we realized that the client was not able to convince us, when we tried to push him for more information, why your projects are not being capitalized, ultimately the client gave up and said, let's impair it. I'm not sure if I can start this plant. So that was a great learning for me during my audit. And I'm sure you all must have come across such situations where you push the client and finally client gives up and says, you caught me, because you know the subject, you know the business, you know the accounting laws, you caught me. I'm not able to, I made an error, or I'm not being honest with you. There are various instances. Like disbursement of advances. You should question the disbursement of huge advances in the time of liquidity crisis. We had many companies when COVID is happening, they are giving loans to different companies. So it's a direct question to ask that your company is in a problem and you want to give loans to other companies for what reason? Definitely there's ulterior motive behind that. So these are good things. Do your homework, read your balance sheet, understand your client, then go. Batch your questions. Now, what do I mean by this? You have a meeting with an accountant one time, let's say senior accountant or the VP finance. You have one meeting with him. You went, you asked 4 questions, you came back. Later you realize, oh, I forgot. I want to ask him 5 more questions. You go back, you ask 5 more questions, you come back. Do you think third time he is going to entertain you? He will say he is busy. He will say, come tomorrow. He will say, I will see you next week. He will say, I don't have time. I have to close my audit. Now you are in an embarrassing state because you want to ask questions about your subject matter and that person is not giving time. So what you must do is you must batch all the questions. So when you are working, collect all your questions and keep, especially in the online world where we have to schedule a call with a person. Collect all your questions and keep. At one shot, ask all the questions. So with this, what will happen is that guy has no time to escape you and you will get all your answers and you can do a better job. So this is one very important thing, especially juniors should take care that make an agenda of your meeting and go. So it shows your seriousness. It shows that you are ready to ask all the questions at one shot. Otherwise, they have a tendency to reply something today and something the other day, and he knows that you don't remember what was spoken that day. So batching the questions helps a lot. If possible, if multiple people are working on an area and single person is responsible, batch the questions of all the areas and take it together to him. So client also is not offended. You finish your work in a faster manner and all the answers can be immediately corroborated with all the FSAs. Have frequent discussions. So audit team should have frequent discussion with senior management, internal auditors, board members, including discussion within the team members between themselves on regular basis. Very, very important, because let's say person doing accounts capital learn something, someone doing accounts payable learn something, someone doing account debtors learn something, and all the information can be corroborated. So we'll have a lot of discussions, and then bring your partner seniors into the discussion. So they will contribute a lot of knowledge to you, which you can take back to the client, and you can escape any answers they give because now you are knowledgeable. Because you have so many discussions, the client is also happy that you are clearing your doubts as soon as possible, and you also get to give a proper view to your client, proper explanation to your client that on certain matters. So yeah, like I said, you can corroborate evidence if you are discussing within your team. Having discussion with personnel other than finance and accounts can also help on occasional basis. So you should have meeting with HR, marketing, logistics, production on the changes in the number of employees, production, location, branches, etc. Now, what will happen? You have done your audit. Let's say you're auditing sales or you're auditing loans. You have done your audit. You have the information, or you are auditing payroll. Have informal discussion with other than finance team. So they will share knowledge on their projects. Obviously, they are not aware of what has been captured in the balance sheet as a transaction or not. So they may reveal information which you can corroborate back to the balance sheet and catch the mistake that, okay, look, let's say the HR person says we have started 6 divisions, and this year we took on new employees in division number 6. And when you check your book, you know that there are only 5 divisions payroll being captured. So that's an immediate flag for you. What happened to the remaining 100 employees in the division 6? Why their payroll is not being captured? Very simple answer. It's very simple example. Because many times the people other than finance do not know what is going in the books. They don't know whether all the divisions of import sales are actually being booked in which book. Whether it is, let's say there are 3 sister companies, they do not know where it is being booked. So if you have a conversation with them, you learn something. Rather, management also would be happy to understand that you have understood something maybe they have overlooked, or maybe they are booking wrongly. So this is a fantastic way to be skeptical. Have meeting with people other than finance and accounts. I have casual discussions, as I said, with employees of the company. Means I'm not saying you go and start having discussion every day with them, but as and when you can have a casual discussion, have a casual discussion and ask about company's performance, financial condition, any new initiative company has given. Okay, and whatever he says, go and corroborate your knowledge with the books. Sometimes they may want to say things that are not on the books, and that is something you can take back, corroborate knowledge, and raise with the senior management. Escalate your finding to senior as soon as possible. This is very, very important, because any concern raised during the audit or any other details which a team member assume is important should be escalated to the next senior and the most experienced team member, manager, or partner. So when, like, for example, when an article assistant identifies several mismatches in a sample chosen for testing, or he comes into possession of new contradictory information, he should escalate the insistence to the seniors, who may initiate discussion with top management to unearth the potential misstatement due to error or fraud. So, because as a single person, you cannot do much. But when you share this up, your manager knows how to articulate the matter to take it up to the top management and getting convincing answers from them. The knowledge of demand you must have for certain serious matters. The senior team member and the partner directly need to discuss the matter. So what happens is certain things like litigations, critical accounting estimates, judgments, let's say merger accounting, derivative accounting, these things are not discussed at junior accountant levels. So these matters need to be directly discussed by your manager or partner, and you need to obtain a management representation on these matters, okay, and lawyer confirmations. That is when you realize something, means your management may have explained something to you, but when you ask for management representation, you get the real picture. One other way to being overcoming the challenge. So let's say you are not able to understand the client's business, or you are not able to understand the way he is speaking or what he is saying. Take one more person with you. So what will happen there is that if that person who you are speaking to is very overpowering, you have 2 people. So if you miss one point to ask the client, the other person will remember and ask the client. So what happens, you don't miss that opportunity to get your information, and you can that way do a better job. So this is something juniors can definitely work with. If they're having trouble understanding something, take someone with you to discussion. Question the assumption the team should test the reasonableness of the assumption used by the management estimates any deviation in the norms, like I've told you. Question the growth in projection during the time of uncertainty, such as COVID-19. Question the ability of the company to raise funds to meet the future demand. Start questioning the client, then you see what answers they give. Depending on the confidence of the client, you know whether he is speaking the truth or not. Trust but verify. So audit team can trust the information given to the client, but he should also verify the same, and whenever possible, corroborate with other audit evidence obtained. Now, for example, I have this personal example. A company once chose to impair the investment basis the cash flow projection of the cash generating unit. Fine, perfect. Everything documented, projections are there, everything. However, they were substantially different from the projections given to support virtual certainty to create and maintain the deferred tax asset. So you all know that to hold a deferred tax asset, you need to show that the company can is profitable and will generate funds and profit in the future. At the same time, the company wanted to impair one of its investments, so it gave a projection of reducing cash flow. So this was contradictory. Ideally, this is supposed to be same, or you need to have reconciled the variance. But this was contradictory audit evidence. And that was a sure red flag that the company is trying to pass its entries as per its convenience. Where they wanted to impair, they impaired. Where they want to maintain DTA, they maintain DTA. So corroborate your evidence, and that will reveal a lot. Receiving, now very good example of being skeptical for external confirmation. Receiving an external confirmation of the Mumbai customer at our office in Mumbai would be deemed idle audit evidence, correct? However, seeing the stamp of the Delhi post office on the envelope, knowing that client office is also in Delhi, customer is in Mumbai, okay? But we have received a confirmation, external confirmation from Delhi post office. And our client is also in Delhi. So it leads you to conclude that confirmation was posted by client to our office and not by the customer, right? So sometimes just looking at the envelope, being skeptical that why, when customer is in Mumbai, then he should be posting from the Mumbai post office. We should be receiving the external confirmation from the Mumbai post office. Why did we receive a confirmation from the Delhi post office for a customer in Mumbai? So this is the way you be skeptical. This is the way you identify, okay, there is something wrong here. See, management is aware of the format you have posted or the request that you have posted to the client. Definitely, they may circumvent and interfere and try to post the confirmation themselves. It is a fraud. Sorry. But you must be alert, and this is real. This happens. Like I recently said, on learning from that a particular manufacturing location is closed, the auditors thought to confirm the same with the production report, rent, and electricity payments made by the company. So if you have learned that location is closed, you need to check, is there production happening there? Is there rent being booked on that location? Is electricity being paid on that location? Sometimes clients prefer to run these locations without accountability to the main office, and it may be that the client is trying to parallelly run a cash business there, or a fraudulent business, or an employee is trying to run a fraudulent business, knowing that in the millions of transactions he may not get caught. So that's one way. Asking the client probing questions. Our team should ask the client more and more probing and open-ended questions. For example, instead of asking, did you capitalize the project A and project B, which is already evident in the FS, you should ask status of all the projects. Let the client give you the information, then you corroborate with the audit, with the financial statements. Do not tell the client exactly what you want. Ask an open-ended question. So questions like, how did you manage the business, or the inventory during the lockdowns? Or discuss how did the competitors fare during the same period. This is an important question that can reveal a lot of information, and then you question the client himself. If your competitors were growing at, let's say, 10%, how did you grow at 20%? It's a fantastic question to ask the client. So these are the way you should ask a probing question. We can use a confirmation process also to confirm interest rates. We can use debtor confirmation process to confirm loans, receivables. So we can use confirmation for debtors. We can use confirmation for unquoted investments. We can identify the management assumptions on the standing of the company, especially for unquoted investments. Management representation, very commonly seen, is that if you're not confident with the management explanation, so management explains to you something, you ask them to give it in writing. As soon as you will ask the person to give it in writing, he cannot give you anything in writing which is not true. So many times what management says and when you ask in writing, what they write and give you is different. two different things, and a different picture gets pasted. So this is where you can be skeptical. Wherever you feel explanation are not convincing, ask him to write and give. You will receive something else most probably. A few small points. How should you plan the timing? You should well in advance plan your audit. Okay. The team should be updated on the technical knowledge and skill on a regular basis. That's how you become more skeptical with a questioning mind. Unpredictability should be put in your audit procedures, such as a surprise cash count, a physical verification, or a confirmation. Surprise during the year, you can do it. So these are the way that you overcome all the challenges. What I've explained to you are simple ways in which you can work around your audit to ensure that you are not just doing tick and tie. You are asking questions, throwing answers, throwing questions there, getting some kind of response. And when these things appear in the file, you are doing a good job of documenting Professor Skepticism. So I hope that you are able to take something back from here and you will help your teams work this way. I'll now take you to a very brief introduction to fraud and Professor Skepticism, because obviously the SA 240 on the responsibility of fraud, if this is there, this standard needs you to be critical, to be skeptical. Okay. And you need to now look for situations that a document may not be authentic or may not be modified, may have been modified. Okay. So skepticism goes right up when you are, looking at fraud. So the SA 240 notes that maintaining Professor Skepticism audits requires have to look at the am I back? Okay, I think the net had just switched. Yeah. So as I was saying that when you're looking at fraud, skepticism goes right up. Am I visible? Hello? Okay, I'll continue. Let me know if it's still a problem. Okay, so when I said when we talk of fraud, definitely we are looking at high skepticism. You start challenging everything, the reliability of the information and the control or preparation of that information, because an employee may have done a fraud and then so he will play with the document and give it to you for verification. So you need to be alert for that. Very simple. Now, when you're doing fraud, the procedures that you did for error, you cannot say that the same procedures will be used for fraud, because they have to be more intense. Okay. Now, so you need to design some further audit procedures, not the same as identifying error, most obviously. Now, SA 240, certain places to push you to check further requires you to make presumptions about the risk of fraud. Now, for example, we assume there is an inherent risk in every file that revenue is overstated. Okay. So this is a presumed fraud risk in every file, that revenue is overstated or that management can override the controls. So this is the presumed risk. So 240 is pushing you to ask the probing questions, to do further procedures, risk assessment procedures, and specific procedures are laid down to be done in case of fraud areas, because we know that in this place it is not sufficient to do a normal audit. We have to take one step further and we have to be very, very skeptical of everything that we do, check, analyze there. Okay. Okay. Okay, I'll just share screen again. Back. Yeah, so this is just a brief highlight, very simple. If you're looking at fraud, responsibility, skepticism has to go high. That's in a nutshell what I'm trying to say. Now let's talk about documentation. Now, the most important feature or documentation is that you need to show that you not only corroborated for professional skepticism to get documented. You don't need to only show that you have corroborated the audit evidence, but you have also challenged the assumptions. You have challenged it. So when you're making a file, you say, I have checked 1, 2, 3, 4, client mentioned this, I have checked this. You say, I asked the client further question. You mentioned we assessed the client for further documents. We asked further documents. We corroborated with further evidence. We challenged why it should not be impaired. Why, like in say in a COVID environment, you have to put down that I challenge the client on his projections. We challenge the client on his inventory valuation. These things have to come out on a file. If these come out on a file, you are being professional. Skepticism is at play. Put notes in your documentation on these matters. So you should also demonstrate the value of the audit by seeking to convince the audit committee that they have properly exercised professional skepticism. Like I said, talk to them of the major estimates, the major transactions. When you talk to them, they also feel confident that yes, auditor has looked at our major matters and he is now telling us or questioning us on certain matters. So this is a very, very good way to tell your audit committee that I am being skeptical in my work. Okay. Now, we have difficulty of time. We are short of time. We have a budget to work on. But this is not a valid basis for auditor to omit an audit procedure for which there is no alternative or to be satisfied with audit evidence that is less than persuasive. Now, this is very, very important. So no matter the difficulty of time or cost, an auditor cannot go back from his responsibility. Whether the client is small or large, fees is less or more, it does not matter. Every audit is the same, and we need to commit our energy and time to doing a good job. And we should not sign the audit report till we are convinced we have completed our audit procedure and we have all evidence that is persuasive to give a reasonable assurance. So there is no compromise here. Okay, we must do our job right. There is no exceptions to this. So let's look at some ways to effectively document professional skepticism. Now, I've already mentioned these things. I'll go through a little quickly on that. You must document the discussions you have had with the manager. This is all the time missing in files. So you should put the agenda, you should put the minutes, put the date of the meeting, put the detail of who attended the meeting, write the questions you raised and the response the client gave. This is a fantastic way of putting down that you had a questioning mind and you questioned the client. This is missing in many files, and I'm sure if we do this, it would speak a lot. Definitely the audit procedure that we have done should be documented. So don't just put the vouchers or the samples in the file. You must write the procedure that we have done. Okay. So write the date you did the procedure, the time at which you did the procedure, the name of the persons who did the procedure, and if you have engaged with any client, then his name also, like in physical verification of inventory or cash count, put the name of the client person also. So document your procedure in that way that the document should speak that yes, you have done all the procedure required and signed off and concluded on the matter. That is a very, very good way of documenting. Instead of only attaching evidence, because when attaching evidence, we know evidence is on file, but we have no proof that we have assessed or analyzed that evidence. So when we show that we have assessed and analyzed the evidence and what conclusion we have got, it shows that we are being skeptical. You must document the risk and the response. So where you have found a risk, you please put down what is the risk you found and how the same has been responded to. So if there's non-compliance of laws you found, or let's say you had a risk in revenue recognition, you write in your procedures, how did you go about that risk, what kind of documents you received, how you are now satisfied that there is no other risk in that client on let's say payroll or revenue or debtors or impairment. Okay. if you document this way, we are talking of being skeptical. Corroboration, of course, as I said, you must have details of specific procedure we performed to corroborate the management response to our inquiries. Okay, so you may cross-reference multiple files or areas where certain evidence is in other area which is matching with our response here. You can cross-link that. And if you have made inquiries with management and those are documented, you cross-link to the evidence obtained to confirm that inquiry. That will show that you not only asked, you also got the evidence to corroborate the inquiry that you did with the management. So that's a very good way. The last that I'm talking about here is the assumptions valuation. Very, very important. So our document evidence must include a critical evaluation of all the significant line assumptions. This is required by the ISA, the essays on estimates, that you have to evaluate the assumptions. You have to evaluate how consistent they are year on year on the assumptions. What was it compared to last year? What are the supporting we have checked? And what is the assurance we have checked with respect to accuracy and completeness of the data that has been obtained? So that is the IP testing, which is required in all audits now. So we must document how, as auditors, we challenge the assumption and were ultimately satisfied with the responses and the assumptions. That part, the challenging part, is less documented. So we need to now focus on documenting that more, because that is the single place where we demonstrate the questioning mind and critical evaluation of the evidence. So we must document the challenges. Okay. Now, let's talk about where are we going in the world with professional skepticism and auditing. How is this going to work together going forward? So let me say, skepticism is not only for auditors, it is also for the management, audit committee, and the board of directors. Okay, companies should be impartially asking themselves, are there alternative accounting treatment? Have we seen all the options that we have? Why are we doing the accounting in a particular way? Like I said in the beginning, the client should first start asking himself, that how is this accounting? What options we have to do the accounting, and then do the accounting, instead of thinking of a way to account it and doing it and waiting for auditor to question why you did it in that way. So they are also responsible to run the company in an ethical and professional manner. So they have to also impartially ask themselves, are they making proper judgment? Are they making proper estimates? Okay. And they should be ready to reply to the auditors. Now, skepticism is influenced by personal behavioral traits like attitude and ethical values, as well as the competence of, that is the knowledge of the individual undertaking the audit. Of course, that is the reason it's very important to educate, train, and gain a lot of experience for every individual who does an audit. Now, as we have better teams with more education, updation, better training and experience, professional skepticism in any firm grows. Now, we need also, it is also influenced by the leaderships and the engagement partner. So the culture and the business environment of the firm should also promote professional skepticism. It should promote quality. Okay. So if team members need more time to do audit, management, the partner, the leadership of that firm should talk to the client and ask for more time, ask for extension if required, even to that extent. Because if you do not support your teams to exercise professional skepticism, how will you do a quality audit? So we need the support of leaderships. We need the support of the partners also. They have to build a culture in the firm that we all will focus on quality. We will not do a less than effective job. We will do a great job in auditing, and if required, we will ask the clients to hold on to the signing of financials, extend their due dates. We must have that environment in the firm, or we may must have environment to proactively target complicated clients, difficult clients, give plan sufficient time on those clients so that we can be skeptical, we can find the problems, the answers, and we can do good documentation. So auditing standards are already speaking about this, and we need to now apply it. So like I said, the very key drivers for professional skepticism going forward are going to be that the individual engagement teams and the audit firms demonstrate professional skepticism. They all collectively come together to promote professional skepticism. Okay. And there should be a consistent understanding of the nature of professional skepticism and the importance of being skeptical, no matter how much regulatory requirements come in, no matter how much reporting requirements come in. The audit report growing as on today, we have so many matters to report in audit report that the work of auditors is going up by leaps and bounds. No matter what, we cannot disregard or give less regard to professional skepticism, and that should always be the primary factor of any firm in the auditing profession to promote, to understand that professional skepticism is what it is. There's no compromise. We must focus on being skeptical at all levels, at planning, execution, and completion. Now, the current economic scenario, world is changing rapidly, changing technology is changing so fast, so we need to now, it is more important now than ever that we auditors have to apply professional skepticism and also demonstrate the same in our behavior and audit files. There is no other way for audit firms to survive today than to pick up and become very, very good and do effective and quality audits, because changes are happening so fast. We need to professionally upgrade ourselves. We need to have a mindset of questioning the client. We need to have the instinctive nature to understand complex businesses, evaluate them, evaluate judgments, and be open to learning new things in the wake of the various things happening in the world today. As firms are going larger and larger, companies are going larger and diversifying, and we are looking today at multiple fair values. We're looking at crypto entering, digital currencies entering the companies. We're looking at IT working hand in hand with all departments and accounting as well. So we all have to become very skeptical. We have to ask questions. We have to understand. We have to document. So professional skepticism is here to stay, and it's going to be even more important going forward. There is no escaping it, and rather firms have now to embrace that auditors will be the ones who will challenge things, and rather clients should now feel that auditors have knowledge of our business as good as we do, as they do, if not more. This is how we can be skeptical and contribute to a growing audit profession. So this is largely what I had to share for professional skepticism. And as one of my favorite lines, that in God we trust and all other things we audit as a profession. So I am done with the presentation officially. If there are any questions or anything you would like to understand further, sir, you can let me know.
So can you hear me?
Yes. Yes, sir, I can hear you.
Sir, first of all, congratulations and thank you so much for such a wonderful, and you have covered all the aspects relating to this, as well as in your initial remarks you have said it is a very wide area, because skepticism is required throughout the audit. In all, you have to cover all the aspects, and you have covered all the aspects in your presentation, sir. So thank you so much, sir, for sparing your valuable time. I have received certain questions. If you permit, can I ask those questions, sir?
Yes, sure.
Sir, first question is relating to how a new person, it is relating to this bank audit, how a new person who gets allotment of bank audit can do bank statutory audit.
Okay, that's it. That's the question.
Yeah.
Okay. So I would not restrict the question only to bank. I would say let's talk about any sector, whether you are doing insurance for the first time, or an oil and gas audit, or you are doing an audit of a trust. All starts with the intention to learn first. Now, speaking about banks, So we do have a very exhaustive guidance note on audit of banks, which is revised every year and released by ICI. I think that will be a very good starting point for you to pick up. So we have the 2022 guidance note as well. I think it's released in June or July. So there is an exhaustive guidance note on audit of banks, which will give you the perspective of change from the normal audit to the bank audit. And they also cover the RBI guidelines. So that is a very good place for you to start to understanding the requirements of a bank audit. That is one. Secondly, you need to see whether in your firm you have other persons who are doing bank audits. So definitely you can speak with them and take some learning. Or consulting outside externally is also an option. If you want to have meetings with people who have experience in audits, you can take a meet some of them and learn from them about it. But largely, I think bank audits are quite the report format, the long form audit report, that there is a lot of guidance on the long form audit report, on audit of various NPAs, and all these guidelines are already issued by ICI. So I think a very good option would be to pick up all the resources available on ICI and purchase these books, which can help you with the bank audit.
Yes, yes, sir. Sir, the client is engaged in trading business through e-commerce platform. It has multiple warehouses across the country. For PV of the inventory, they allow only 2-3 hours once in a year, stating that operations cannot be stopped, which seems to be practical to a certain extent as per the nature of the business. How this situation can be dealt with more effectively and efficiently to have appropriate comfort over existence of the inventory.
Okay, so if I understood correctly, you are allowed to do a physical verification of the inventory.
Yes.
For a couple of hours.
Yes. Yes, yes, yes.
Right. So this is not uncommon. A perpetual inventory system is something that is prevalent in many industries. Some industries do stop their activities, trading and production process for 1 day or 2 days around the end of the year, or maybe after the end of the year, maybe 5th April or 20th April or something like that. And they reconcile the differences to 31st March. They roll back. Now, what I understand with you is that there are difficulties in stopping the production process for very long, the trading process. But somewhere the client will have a process where they can stop it for a couple of hours, maybe not on a 31st, but close to 31st. And you can check all the controls in place on the physical verification. You can check all the procedures done by management to ensure that physical verification is happening properly. And you can work it, you can reconcile it back to 31st March to know whether the inventory arrived at 31st March is proper or not. So
yes.
So yeah, that it is possible. You need to discuss more with your client, and you need to request them that it is not only you are not doing physical verification, client is doing the physical verification, and you are going there to observe. So they also, as an accounting process, as a control process, need to do physical verification. But yes, it is sometimes difficult. So you need to document all the controls around their system to be sure that system is working properly, as inventory is in place, is in existence. And then you can do lesser substantive procedure around around the inventory to confirm the existence.
Yes, sir. So another question is relating to, as in your initial remarks when you mentioned auditor is a watchdog, not a bloodhound, and it is the responsibility of the auditor to look into this. So one member is asking, is the watchdog concept applicable to professional skepticism also? How it is related to the professional skepticism?
That's a good question. Good question. So this is like a 100-year-old statement, and it is still valid. Okay. But yes, we often joke that now auditor is doing so much work, only preparing the financial is remaining. Rest everything he's doing, he knows. So writing the books is only pending, because now auditor to understand every element of the balance sheet is getting into everything. When we look at CARO, when we look at 143.3 reporting, we are looking at IFC. So yes, the scope of the auditor has gone up very much. But let me tell you, the auditor is still signing a true and fair view report. He is not signing a true and correct view. So all said and done, auditor is still a watchdog. Okay, he is responsible to watch over things. And if reason comes by skepticism, if he realizes that there is something fishy or something wrong, then definitely he has to investigate. He has to get into that matter. But otherwise, he is a, let's say, watchdog. But in today's world, if you ask me, he's very, very alert and very, very awake watchdog. Let's put it that way.
Yes. So one question is relating to, if we are talking about the professional skepticism during audit, it is relevant for the both internal audit as well as external audit also.
Yes, if you ask me, yes, professional skepticism is applicable in all audits. But like I said, the other professions like internal audit, risk advisory, evaluation, taxation, while yes, they need to have professional skepticism, and they report back to the client. So client has given them the objective to achieve, and they are working towards that. In that process, they are being skeptical. But for external auditor, he need to be skeptical for everything, because he is not sitting with a fixed agenda that we need to finish the tax working or we need to do evaluation. He is sitting from the area of all the stakeholders, that they are all looking at him. So he need to sit back and look at it again holistically, that what view I am taking, what skepticism I am applying is proper or no. That's why in judgment we need to sit back in the end. That is the point I had, that we need to sit back. We may get in and do the job, but we need to sit back and again see what I am doing is suitable from the stakeholders' point of view, from the shareholders' point of view, banks' point of view.
Yes, sir. So thank you so much, sir, for such wonderful deliberation on behalf of Auditing and Assurance Standard Board. I extend my heartiest thanks on behalf of AASB of ICI for sparing your valuable time and enlightening all of us on this very important topic, that is the professional skepticism. Thank you so much, sir. Thank you so much.
Thank you so much, sir. It was my pleasure to be here and speak. I know this topic is very close to all our heart.
Yes. And you have acceded to our request on a very shorter notice during the time of the various audit committee meetings also. So yes. Thank you so much once again, sir. Thank you, sir.
Most welcome. Thank you, everyone. Have a good day.
Yes. Good day.